Today is Monday, November 30th, 2020, and this is this week's One Stock to Buy and One Stock to Dump. So in today's video, we'll identify one name likely to see further gains in the coming week and another expected to underperform the broader market in the days ahead. Stocks ended in positive territory on Friday, with both the S&P 500 and the NASDAQ rising to new all-time highs. It's been a banner month for Wall Street in November, with the Dow up almost 13%, which would put it on track for its biggest monthly gain since January 1987. Basically, it's been a combination of optimism over COVID-19 vaccines, as well as bets that the Federal Reserve will have to introduce further stimulus measures as early as this month. We'll have more COVID-19 related headlines to monitor this week as cases continue to soar across the country, leading some to worry that further restrictions could be imposed. Regardless of which direction the market goes this week, here is one stock to buy and one stock to dump. So our stock to buy this week is DocuSign. DocuSign is widely considered the leader in the e-signature market. Shares have thrived this year as the COVID pandemic and the shift to the work from home environment created soaring demand for its products and services. The software as a service company has seen its shares more than double in 2020, jumping 206% year to date, easily outpacing the S&P 500's gains for the year. DocuStock closed at $226 on Friday, giving the leading provider of electronic signatures a valuation of roughly $42 billion. DocuSign reports its latest financial results on Thursday, December 3rd, after the closing bell. Consensus estimates call for EPS of 13 cents, which would be an improvement from earnings of 11 cents per share in the same period a year earlier. Even more impressive, revenue is forecast to jump 45% compared to the year ago period to $361 million, as less business travel during the ongoing pandemic led to more companies signing contracts electronically. Beyond the top and bottom line numbers, we'll be focusing on DocuSign's update regarding its customer additions to see if it maintained its torrid pace of growth. The company has already added 166,000 paying customers in the first half of the fiscal year, already eclipsing the total seen throughout the entire of 2019, which was 112,000. It now has a total of 749,000 customers in more than 180 countries. That is up 75% from just 2 years earlier. Investors will be also keen to hear additional details regarding DocuSign's efforts to expand its product portfolio, such as adding notary service that does not require in-person signatures. It is also investing in international expansion. Despite positive vaccine announcements earlier this month, we expect DocuSign will remain resilient as the renewed surge in coronavirus cases across the country could lead to further restrictions. Obviously, that would likely result in even more demand for DocuSign's products and services. So that is why we like Docu heading into the week ahead. Stay up to date with the latest earnings results by heading over to Investing.com's earnings calendar. DocuSign reports earnings on Thursday after the bell. Our stock to dump this week is Nikola. Investors may want to stay away from the embattled electric truck maker for two reasons this week. First of all, concerns that its all-important $2 billion deal with General Motors will not go through ahead of the planned Thursday, December 3rd deadline. Chief Executive Mark Russell, who replaced ousted founder Trevor Milton back in September following fraud allegations, failed to offer assurances last week that the deal with GM will in fact go through. The proposed partnership would give General Motors an 11% stake in Nikola and would allow it to engineer and manufacture Nikola's all-electric pickup truck called the Badger. The agreement was initially slated to close on September 30th. However, it was delayed in part because of a scathing short selling report by investing firm Hindenburg Research, which accused the electric vehicle startup of misleading investors. Another potential cause for concern for Nikola shareholders this week would be what Milton plans to do with the 92.2 million shares he owns after a lockup period expires on Tuesday, December 1st. That basically prevented Milton from selling his shares up until that point. There are roughly 361 million Nikola stock outstanding, making the former CEO Nikola's largest single shareholder. So if Milton were to sell even a fraction of his holdings, it could put large technical selling pressure on the stock. Taking this into account, shares of the electric vehicle maker will likely remain vulnerable to sharp swings in the days ahead. Just taking a look at Nikola's chart, shares are down nearly 70% since reaching an all-time high of around $94 shortly after going public in June through a reverse merger with Vector IQ, a special purpose acquisition firm, or SPAC. Nikola shares are down about 33% since Hindenburg Research published its short selling report on September 10th. Shares closed at $27.93 on Friday, giving it a market cap of about $7.4 billion. So hopefully you enjoyed this video. Keep an eye on DocuSign and Nikola Stock in the week ahead. And if you have any or more names which you want me to go over for next week or the following week, please leave them in the comments section below. So that's it for me. May the trading gods be with you.